So we're going to talk about the difference between your personal and business credit score. This recaps what we've already discussed about the bail team and the importance of it, and the top 3 reasons why a business might fail and how you can mitigate that risk. So let's start with the personal credit scores. What you need to know about your personal credit score and how to build it. So one of the things that I want to overview about the personal credit score before we get started, as you know, there's 3 credit bureaus, Equifax, TransUnion, and Experian. And if you're looking for going into business as a partner and have 50-50 ownership or giving up at least 20% ownership to a partner, all of you of a 20% ownership or more of a business will be required to sign as a personal guarantor for a business request. Let me repeat that. If you are a 20% or more owner of the business, we will require that person that owns 20% or more to sign as a personal guarantor for the business. So what does that mean? You want to make sure that if a person is 20% or more ownership of the business, you have a conversation with them about having good credit personally, because someone's good credit doesn't make somebody's challenged credit good. You still might get declined. So let's say you're going to go in partnership with someone and it's 50% ownership. Your credit is great, their credit is challenged for whatever reason. Like I mentioned before, there's no judgment here. There could be reasons why that credit is challenged. It's just you got to fix it and try to fix that and repair it and get that back on track to make the opportunity to apply for a loan as favorable as possible to get approved. So Credit Karma, Credit Union, Score, Bank of America, Capital One, there are a lot of different ways that are out there in the community for different resources of getting an idea of what your score is. But let's talk about Credit Karma and all those different resources. That is not your actual score. It is only them taking their best guess at what your score is. It is not your score. The only way you can get your true score is if you're applying for a line or a loan or a partner that's getting approval from you to pull your credit. And then by law, because your credit score is private, we have to, as a lending institution, send you a letter who we pulled and the score that they said you had. So now you know why Credit Karma and those other scores that are out there might be different when you're applying for a loan or a line of credit and you get that letter in the mail and Credit Karma says your score is 650, and then you get a letter in the mail that you're declined because your score was 600 from Equifax. And you're like, well, I don't understand. Credit Karma said it was 650. Why does it say it's 600? Because Credit Karma is only taking their best guess of what your score is. It is not your score. So what's great about your personal score is that you can use your personal score when it's strong to be able to get you approved for your business. Because we are going to pull your personal credit, and if you don't have business credit, we will use your personal credit to either approve or decline you. It's a great resource. So let's talk about the 5 factors of your personal credit score, which is also called your FICO score. 35% goes to the payment history, 30% goes to the utilization, 15% goes to the length of history, 10% goes to the type of accounts or credit that you use, and 10% is the last factor talking about how many inquiries you've had on your credit. So let's talk about the first factor. This is based on your payment history, the date of your last payment, whether it was missed or on time. The payment is assessed and measured based on how recent the payment is, how severe the payment is, or how frequent they are, whether it's on time or missed. This is Mac Daddy of your score. This is the largest percent of your score. You need to get this one and the next factor right. The first two factors that I'm talking about, you've got to get these two factors right. So listen when we're talking about this algorithm. So let me give you an example of this particular factor. You can have a $10,000 judgment that's 3 years old that's going to weigh less than your Pizza Hut collection that you just paid off from 5 years ago for $14. You're like, wait a minute. $10,000 is a lot heavier, in my opinion, than $14. I don't understand. Why is it heavier weighted? Because you can have like a 700 score, and as soon as you pay on that 5 year ago $14 Pizza Hut collection, you're going to decrease your score and plummet it by 35%. Because this is a computer, it can only pick up your most recent activity. And your most recent activity in this particular situation is the Pizza Hut collection that you just paid, because you're not touching that judgment that's 3 years old. So keep in consideration, it is a computer, not a human being. And it's based on how you actually handle your credit. So as a disclosure, I want to say that this is for educational purposes only. It's not intended to be used for legal, tax, or investment advice. And I wanted to explain to you how that first factor works. So the second factor is 30% goes to the available credit that you have. This particular factor is talking about your lines of credit or your credit cards. It's the revolving credit that you have. And typically, this is 30% of your available credit. This is a big factor. And typically, it's rated based on the limit minus the amount you owe. And you want to have 28% utilization or less. So let me give you an example of how this works. You can have 3 credit cards. Well, let's say 2 credit cards and 1 line of credit. In this particular example, you have a $2,000 limit that you can use on your credit card from Fulton Bank. You have another $2,000 limit on your line of credit that you have with Bank of America, and you have a $1,000 limit on your Capital One credit card. That gives you a $5,000 total. As soon as you are over 28% utilization of your $5,000 limit, which is $1,500 or more, you have decreased your score by 30%. Let me repeat that. You have a $5,000 limit all total. As soon as you have a $1,500 balance on that credit card, all total, or on one of them, you've plummeted your score by 30%. The other thing you need to know is if you do not have a credit card or a line of credit that you can use, you are negatively impacting your score by 30% immediately, right off the bat. So it's important that you understand how you overcome that. And I'm going to give you some examples of how to overcome that on the next screen. But on the right-hand side, you can see your credit utilization ratio in this algorithm. If you're at 0 to 9%, you're going to have the best utilization rate and the highest percent in this particular algorithm, and pretty good score, if I were to say. If you're at 10 to 29%, you're still in the good range. If you're over 29% utilization to 30 plus, that's when you're negatively impacting your score by 30%. So how do you overcome that challenge? You can take the $1,500 and pay it down to get it under 28% utilization. You can call the credit card company and increase your limit, or you can piggyback an example of a family or friend's credit card. I'm going to give an example of my grandmother. Let's say I have that $1,500 balance on my credit card, and my limit is $5,000. I'm over my utilization. I call Grandma and I say, look, Grandma, can you add me to your credit card that you have that's $10,000 that you use rarely and you pay it off and you've had for a numerous amount of years, and add me to that. And as soon as she does, as an authorized user, I have decreased my utilization and increased my score by 30% immediately because she doesn't have a balance on that credit card. And then it's giving me a $50,000 limit instead of just a $5,000 limit when she adds me to her credit card for $10,000 as a limit. Third factor, 15% goes to the credit history, which is the length of time you've had credit. Generally, the longer credit history you have, the better it is for your score. So don't just close out your credit cards, because when you do, or you close out your lines of credits, when you do, you are possibly decreasing your score by 15% because you're wiping out your history. The fourth factor is based on 10% of your score, and that's the type of credit you have. Third heaviest weighted in this category is credit cards and lines of credit. Second heaviest weighted is car loans, secured loans, unsecured loans. First heaviest weighted is your mortgage loans. So you can see there's revolving debt examples and installment loan examples. You need to make sure that your installment loan debt is paid on time without missed at all. Well, I mean, at the end of the day, you don't want to miss any of your payments. But as you know, any student loans, auto loans, personal loans are heavier weighted in this particular category. However, this is 10% of your credit score. So the fifth factor and last factor that we talk about today for the personal credit score is inquiries. This is a number of inquiries that you have that you pull in your credit. So soft credit or soft pull has no impact on your report. A hard inquiry will stay on your credit bureau for 2 years. If you have payments that are more than 30 days late, that's going to stay on your credit bureau for 7 years. If you have a defaulted account, which is a judgment or a collection, once you've paid off or caught up that collection or judgment or paid it off, then it stays on your bureau from 7 years from when you paid off. If you have a foreclosure, it's going to stay on your bureau for 7 years. If you have a bankruptcy, whether it's Chapter 13 or Chapter 7, it's going to stay on your credit bureau from 7 to 10 years. Some great examples of how you can build credit is open a business credit card that will help you establish a trade line in the business name. You can be a startup, and that will help you start establishing business. You can have a secured credit card. Fulton Bank has all these credit cards, so if you need them, just reach out to me, and we can get that taken care of for you right over the phone if you like. Secured credit card, we do not charge an annual fee. We take $300 of your money and we hold it as collateral, and we give you $300 limit, and typically after a year we give the $300 back to you and have the open to buy without it being secured and start establishing credit that way. That's a great way if you have challenged credit to rebuild, or if you are starting up with credit to be able to build on that credit. What is considered a good credit score? So bankers cannot tell you what score you must have in order to apply, but I can give you a range that you want to try to attain to have the best possible option of getting approved. So if you are new or you have poor credit, new to credit or poor credit, your range is probably going to be 300 upwards to 669. This is a good challenge for you because in this range, there's a good opportunity that you have the possibility of getting declined. If you're 670 and above to 739, there's a good chance you'll get approved. Your rates might be higher or there might be more fees. But if you're 740 and above, it's an excellent and exceptional credit score. So you have the capability of, in some cases, negotiating the rate, fees, or you're getting the best rate possible. So it's challenging to have a challenged credit score when you're paying on the rate. It's more expensive. So if you are doing a 5-year loan, this is the national average right now, for a new car, and your score is 500 to 589, the range that you're going to pay on the rate is 15.24% or more. But if you can do the same loan, and if your score is 720 to 850, you're going to pay a lot less in the rate of 3.6% or less. Some other pulled credit companies that can show as an inquiry on your business and stay on there for 2 years. That's not a lending institution. Could be an apartment complex, utility companies, cell phone carriers, employment, insurance companies, but they will usually have you sign an agreement that you're okay with them pulling your credit because they are bound and regulated to send you a letter in the mail of which credit report they pulled and what the credit score was. So if I'm looking to repair credit, give me some ideas on what I can do to repair credit. Pay your bills on time, set up automatic payments. Apply for credit only when you need it because that's going to cause a hard inquiry. Monitor your score by the utilization ratio, stay under 28% to 30%. Track your credit report for any mistakes that you might have. Annualcreditreport.com is a great resource to be able to pull all 3 credit bureaus. And if you have challenging credit issues going on, like bankruptcy, foreclosure, late payments, you're going to need to give it time. What about those credit repair services? Can I trust them? Can you trust them? What does that all mean? Well, there are credit repair services out there that you can trust. They do charge you a fee. And now you know what the 5 algorithms are. You can actually repair your own credit score. And there's nothing that the credit repair company can do legally that you can't do for yourself at no cost. You go to the Consumer Financial Protection Bureau. They will highlight the warning signals of any scamming repair companies. You can also go to the Department of Justice. They'll have a list of approved credit counseling agencies. Take a picture of this particular screen. This gives you an idea of where you can go to get a copy of your credit report up to 6 times per year with no fee. And that's annualcreditreport.com or Equifax, Experian, or TransUnion. So how often should you review your credit report? I would review it a minimally each quarter. First quarter, second quarter, third quarter, fourth quarter. So that's 4 times throughout the year. What should you do if there's an error? You should get in touch with the credit bureau and dispute it. Whose responsibility is it to fix mistakes on your credit report? It's your responsibility. That's why you need to monitor it. I would say a minimally of 4 times per year. So this takes us into the fundamentals of understanding your business credit score and what it all means. So information that you can find when it helps decide what your business score is. So in other words, what information is collected in order to give the business reporting agency what my score is. And that is information provided by the banks, lenders, and investors, could be landlords or other businesses, or even government agencies that report on you. It could include items such as analysis of creditworthiness, insurance underwritings, employment, certain licenses, credit terms, and business needs. The credit reporting agencies collect all that information from banks, any payment histories, judgments, collections, tax liens, and unpaid lawsuits. They identify you, they meaning the credit reporting agency, identifies you by your tax number, any previous addresses that you've had for your business, and any former names that you've had for your business. Sometimes a business will change its name but keep the same tax ID number. How do you start the process of building a credit file for your credit report for the Business Bureau? First, you obtain a tax ID number, or sometimes called EIN number, from the IRS.gov, Internal Revenue Service. Then you go to Dun & Bradstreet, dnb.com, and you can obtain a data universal numbering system, and that's called a DUNS number. If you do business with the federal government or the state, they will report to the Business Credit Bureau by your DUNS number. You can also become a subscriber of any of the top 3 reporting business bureaus, and they will tell you what your score is for the business, and in most cases give you a copy of your business credit score report. And to ensure the most favorable credit rating for your business bureau, you can include the strongest, most well-established open trade lines of credit accounts in your registration information. The reporting agency will contact the creditor you list for the most current information. That's right, you have skin in the game. You can actually help build on your score by helping the business bureaus. I'm going to tell you what they are on the next screen. I give you the top 3 and let them know who they can reach out to gain information about how you handle your trade line. The top 3 key reporting agencies is Dun & Bradstreet, Experian Business, and Equifax Business. Each of these agencies has extensive information on their websites regarding the service they provide. You can check with the sales consultant about pricing and additional services. So most banks and credit unions use Dun & Bradstreet, and you can go to Dun & Bradstreet and get a copy of your business credit bureau, and it will tell you what the score is. And for a fee, Dun & Bradstreet will collaborate with you to help build your business credit score and as strong as possible. Each reporting agency will give you a free business credit report, and for a fee, they can provide additional services such as the summary of your financial and non-financial accounts, all your public records, any security of state business registrations. They'll give you the scores from other reporting agencies, and they'll tell you what your payment trend is in comparison to the industry over the last 12 months. Your business credit report, when you get a copy of it, it's going to have information on it, such as your risk and business potential failure indicator, credit filings, business ownership, any public records of any filings, and collateral that you're using for other business loans. This gives you an idea of what the range is for your business credit score. You can see here it's different from your personal credit score. So let's sum up how the credit report recap of everything works. So incorporate your business, get your tax ID number or EIN number, open a business bank account for your business. Stop commingling your personal and your business information on a personal account. As an example, Fulton Bank does not charge for our business checking accounts any monthly maintenance fee or minimum balance requirements. So you can choose someone like Fulton Bank to have several business accounts, one for payroll, one for merchant services, one for an operating account. If you have different investment properties, you can have as many accounts as you want to with Fulton Bank for each property that you own. It helps you really budget and be able to use the bank to budget instead of you having to do all of that on your own. Register your Dunn number. Open utilities in your business name for your business. You can open a business credit card or do business funding that will help start building business credit. Again, stop using your personal credit for business expenses. Pay your bills on time for the business. Monitor your business credit report, just like you do for the personal credit report. So let's talk about the differences between the two before we move on and ask questions. So think of the questions that you might have and put that in the chat room as we're going to sum up the difference between personal credit and business credit. So the personal credit is identified and called FICO or Beacon score. The business credit is called PAYDEX or Intella score. The scores range are different. It's from 350 to 850 for the personal credit, and for the business, it's 0 to 100. The three major credit bureaus are different for each one. Your personal credit score is tracked by your Social Security number. Your business credit score is tracked by your tax ID number or EIN number, your name and address for your business. Your personal credit score is protected. It is protected by law. No one, unless you sign and give them permission, can pull your score. Whereas the business credit profile, business score, is not private, and it does not have any state or federal regulations. So this is another resource screen to take a snapshot of your phone. These are all the resources that have been used to be able to present you this information about personal and business credit. Again, this is for educational purposes only. It's not intended to be used for legal, tax, or investment advice. So this information was brought to you by a number of resources. Marcus by Goldman Sachs Credit Card, myfico.com, the Consumer Financial Protection Bureau, the Department of Justice, AV, Value Penguin, MyFICO, FDIC.gov/education. So those are all the different resources to give you in this wonderful day of National Veterans Small Business Week to help you as an additional resource in what they do for the community to be able to help you make your business stronger, because we all want you to be successful. And this is a great way for you to understand what you need to know about how to go to the bank or credit union and ask for funding for your business. Please feel free. I'm happy to do so to answer any questions that you have. Whether you're choosing Fulton Bank or not as a resource, just want to make sure that you are pointing in the right direction, or I can answer any questions that you might have after today's presentation. So I am looking at the last question here. Okay. There's a question about franchises startup funding. While one is, okay, so there is a question about franchises startup funding. Craig, if you want to take yourself off mute and ask that question about franchise startup funding. So I am going to see if maybe I can take a shot at that. I'm not sure if Craig is still there. Franchise startup funding has a lot of unique opportunities there. I know that the Veterans Business Outreach Center just had a call on that. And if you have a specific question about franchise startup funding, let me know. What's great about franchises is they have an established business plan. We're still going to want to know what your business plan is, help you understand, do you need startup funds to be able to acquire or start that franchise. And there are different resources, as I mentioned, to be able to help you with funding your startup franchise. We're looking for industry experience. We're looking for outside source of income if you don't have collateral. And that's just to kind of give you an idea of what SBA funding looks like. Because unless you use a 401k or a franchise specific to funding a business company, you'll need to go SBA. And franchises to go SBA funding will need to be on the approved SBA franchise list, and you can find that on SBA.gov. They have that list for you to be able to drill down and see if they are on the approved franchise list for us to consider you for funding it through SBA. I'm actually doing a couple of franchises right now. So while one is repairing their personal credit, what source of action would you recommend while building your personal credit to keep your dreams moving forward, because it takes time to rebuild? So one of the things that I would encourage you to do is the secured credit card, and to get with either myself to talk about a strategy to repair credit and or a credit counseling company. So, you're not alone. There are resources, including myself, that are out there that can kind of roll up their sleeves and help you with that. How does Dunn's number differ from EIN number? So a Dunn's number is tracked differently from your tax ID number. Your tax ID number is tracked by IRS for the Internal Revenue Service. The Dunn's number is tracked by usually the government, federal government, or the state, and that's kind of different between the two. If you want to reach out to me, or if you have, or be younger, if you can come off mute, and if you have a more specific question that I can answer, let me know. I'm going to give you a second to come off mute. Okay. So the next question, when you say incorporate your business, does that mean a corporation, or can it be an LLP? So incorporate your business means get away from using your Social Security number for a sole proprietorship. You can incorporate through an LLP, LLC, S Corp, or C Corp. But I would encourage on the bail team, which is your the lawyer or your CPA can help you figure out what's the right corporation for you, which is either LLP, LLC, or S Corp or C Corp, and get with them to come up with the right strategy and the right solution for you and your business and what you're looking to do. I just posted a question asking about how Dunn's number. Is this helpful for anyone? Okay, so I'm sorry I didn't have a mic. Oh, okay, so I'm sorry, Craig. Someone else asked about startup funding. So please reach out to me if you have additional questions about someone asking about startup funding. So I will tell you, for startup funding, it can be very challenging, whether it's for a franchise, whether it's a startup business. And small business administration loans, SBA loans, is a great resource to be able to help you with your funding. That's what I specialize in. Please don't hesitate to reach out to me and we can talk about the right strategy for you. And sometimes my clients will bootstrap. Sometimes they'll use a little bit of a business credit card, personal credit, SBA funding. Depends on what each customer is individualized. So each story and strategy will be different. So please reach out to me. I'd be happy to really talk about that more in detail. So thank you for all the questions. I will stay on for a couple of more minutes. Troy, I'm going to turn it over to you. I think we've answered all the questions. Oh, I've got one here. If a business has a line of credit, does having a balance versus not carrying a balance affect the credit score one way or the other? So remember, it's based on the trust factor. Two things. I am not encouraging you to go out and get in debt. But if you have like a business credit card or a line of credit and you use it and pay it off, that gives the bank a better understanding of if you pay on time or not. But if you do have a business credit card or a line of credit and you're not using it at all, then we really can't tell what that history is other than you've got one. So I would encourage you to use it, but not to pay interest. Maybe you use a 20 months no interest, no annual fee strategy. Maybe you use a business credit card with point rewards that after you put something on the business credit card and you pay it off before the 30 days, it gives you cash back. Fulton Bank has that one with no annual fee. So you can make money off of the bank while you're building business credit. It's a great strategy in my opinion.
Does business credit have a credit report?
Yes, it does. And the 3 credit reports that we talked about, and then you actually have a credit score. The one I would focus on is Dunn and Bradstreet. So if you go to D&B, D as in David, N as in Nancy, B as in boy.com, they will give you your free credit report for the business. And it's not private. They'll give you your score too. And for a fee, they'll help you build your business credit. But I encourage you to get with your bail team, your banker, your trusted advisor to come up with a good strategy for the right product to do that. Like some of those resources like NAV or Credit Karma, they try to talk you into applying for a business loan or line of credit or a personal loan or line of credit. I would encourage you not to do that. I would encourage you to get with your trusted advisor and come up with the right solution for the product that you need for your business. Because those resources, in my opinion, they're just trying to entice you to apply. So that's not necessarily the right strategy. I would encourage you to get with your banker. So great question. Troy, okay, so I think does credit utilization impact business credit? Not in business credit. Now, if you are over leveraged on a lot of business credit, the bank will ask you for a business debt schedule so we can understand what balances that you have on existing loans So if we're looking at debt service coverage ratio and you're overutilized in your business credit cards and loans to not cover you SBA to 1.15% debt service coverage or conventional of 2% debt service coverage ratio, then it could lead to a decline. Well, I just want to say thank you. Let's see. Are there investors for professional companies? Absolutely. And professional companies, there are different types of loans out there, whether it's SBA or conventional financing that we look at that can be more favorable to professional companies like attorneys or doctors or, those types of services. And investors that are out there. So angellist.com, I would encourage you to reach out. But a lot of times when it's a professional company and you have a good business plan, SBA is a really great startup option as a product to fund you for your business. Great question. So I just want to say thank you to everybody that is on the call today. Please, and Craig, thank you for the feedback. Looking forward to you contacting me. If I don't hear from whoever is on the call today, I wish you and your family and your business venture the very best. Myself, Fulton Bank, and the Veterans Business Outreach Center is here for you as a resource on National Veterans Small Business Week. We thank you again for what you have done for your community and your service for our country. Big hugs over the phone. And I love the Veterans Business Outreach Center. Continue reaching out for these different speaking engagements, seminars. I promise you, you won't be wasting your time. They're a great resource to take that off your plate of you don't know what you don't know. And Troy, thank you to you and the VBOC and Sherlyn and Sharitha and Don Miller for having me on the call today. And I appreciate the time you've allowed me to help the community. And I wish you the very best for the rest of your day.